All right, so we're diving into something today that I think is becoming more and more relevant to, well, pretty much everyone, really. And we've got a real treat. This deep dive is brought to you by Pro Tax Accountant. They're a bit of an institution when it comes to, all things finance here in the UK, right?
Yeah, definitely. Pro tax accountant. They know their stuff. And this topic is, well, it's crucial these days. We see so many people now with income from all over the place.
It's true. You've got your main job, then maybe you pick up a few freelance gigs on the side, or maybe you're selling stuff online, or even like renting out a property.
It's a whole new world of earning, isn't it?
Yeah.
But then when tax season rolls around, it can feel a bit, well, overwhelming.
You're juggling a lot more than you used to. And that's what we want to tackle in this deep dive. How do you stay on top of your tax obligations without needing to, become a certified accountant?
Exactly. No one wants to spend their days buried in tax gods,
Yeah.
right? We want to break it down for you, give you some really clear, actionable advice that you can actually use.
So let's just jump right in. What's the most fundamental thing we need to grasp about how taxes work in the UK when you've got multiple income streams going on?
Okay, so the core principle here is this. HMRC, they don't just look at one source of your income. They look at the whole picture.
Right. So it's not just about the salary from your 9 to 5.
Nope, not at all. They take into account everything. Your employment income, sure, but also profits from any self-employment, anything you make from investments, any rental income, and of course, all those side hustles that people are doing these days.
It's about the total, right? And when you think about all those different sources, I bet it adds up to a pretty significant chunk of change overall.
Oh, it definitely does. HMRC collected a massive, like 828.9 billion pounds in tax revenue
All right.
in the 2023-24 tax year.
Wow. Okay, that puts things in perspective. And you were saying earlier that more and more people are finding themselves in this situation with income from multiple sources. That's got to have some pretty big implications for the whole system.
It does. One big factor to consider is that right now, the personal allowance and the income tax bans in England, Wales, and Northern Ireland, they're frozen until April 2028.
They are. Why does that matter?
Well, think about it. As people earn more from these various side gigs and investments, but the tax thresholds stay the same, a larger chunk of their earnings could end up being taxed.
Ah, I see. You're basically bumping into higher tax brackets more easily. So that's something to be really mindful of. Okay, so we've established that all income counts. Let's get into the nitty-gritty of income tax itself, starting with the personal allowance and those tax bands you mentioned.
All right, so in the 2025-26 tax year, the standard personal allowance is set at 12,570 pounds.
Which
It means you can earn that much before you even have to think about paying income tax.
Okay, got it. It's like a tax-free buffer zone.
Exactly. But there's a little twist. This allowance, it's not a fixed amount for absolutely everyone. If your total income goes over 100,000 pounds, the personal allowance actually starts to shrink.
Seriously.
Yeah, and if your income hits 125,140 pounds or more, the allowance vanishes completely. It's like it never existed.
That's kind of wild. So basically, the more you earn above a certain point, the less of that initial tax-free amount you get to keep.
Exactly. It can make things a bit more complicated for
Yeah.
those higher earners, yeah.
So it's definitely worth crunching the numbers carefully if you're in that boat.
All right. And then we have those different tax rates that kick in once you're above that personal allowance.
Right. So in England, Wales, and Northern Ireland for 2025-26, you've got your basic rate of 20% for income between 12,571 pounds and 50,270 pounds. Then, once you climb above that, you hit the higher rate.
Which is?
That's 40% on earnings between 50,271 pounds and 125,140 pounds. And for those lucky few earning above 125,140 pounds, there's the additional rate.
That's the big one, right?
Yeah, it clocks in at 45%. Okay, so those are the key numbers to keep in mind. And just a quick reminder for anyone listening in Scotland, you guys have your own set of tax bands and thresholds, so make sure you check those out specifically. But income tax is just one piece of the puzzle, right? We can't forget about national insurance.
Absolutely. National insurance, or NI as it's usually called, that's another important tax, especially when you're dealing with income from various sources. And the rules are different depending on whether you're employed or self-employed.
Right, because it's all tied into things like your state pension and other benefits. So let's start with the employed folks. What's the deal with national insurance for them?
Okay, so if you're working for an employer, you'll usually pay Class 1 national insurance. For 2025-26, you're looking at 8% on earnings between 12,507 pounds and 50,270 pounds.
And anything above that?
Above 50,270 pounds, it drops down to 2%.
Okay, not too bad. And what about all the self-employed entrepreneurs out there?
For the self-employed, things get a bit more layered. You've got Class 2 and Class 4 national insurance. Class 2 is a weekly flat rate, but you only pay it if your profits are over 6,725 returns for the year.
Got it. So it's not like a guaranteed payment if you're just starting out. What about class 4?
Class 4 is calculated as a percentage of your profits above 12,570 pounds. In 2025-26, you're looking at 6% on profits between 12,570 pounds and 50,270 pounds. Then it goes down to 2% on anything above that.
All right, so if you're juggling a job and some self-employed work, you could potentially be paying both types of national insurance.
You could, but the good news is there's a cap on the total amount of national insurance you have to pay in a year. Doesn't matter how many income streams you've got.
That's good to know. There's a limit. Okay, we've talked about the different taxes involved, but before you even get to that stage, you need to know what income to report in the first place. It sounds obvious, but with so many sources, it could be easy to miss something.
Oh, absolutely. It's crucial to be thorough. You need to look at every single way you're earning money. Employment income is usually the easiest. That's your salary or wages. And even though tax and national insurance are usually deducted right from your paycheck with PYE, it's still part of the whole picture, especially when you have other income streams in the mix.
Yeah, it all adds up in the end. What are some of the other typical sources people should be thinking about?
Well, self-employment income is a big one. If you're freelancing, consulting, running your own business, or doing any kind of independent work, you need to keep super detailed records of all your income.
Like down to the penny.
Pretty much. And it's not just about the money coming in. You also need to track all your allowable business expenses. Stuff like costs for your home office, travel expenses for work, utilities you use for your business. Those can all be deducted from your taxable profit.
Sounds like good record keeping is essential for anyone who's self-employed.
It's your best friend.
What about those folks who are renting out property? What do they need to know?
If you're a landlord, all that rental income, it all needs to be declared. Report everything you receive. And remember, you can claim certain expenses against that income.
Like what?
Repairs and maintenance on the property, letting agent fees, buildings insurance, things like that.
Okay, so there are some deductions available there. And what about if you have some savings or investments that are generating income?
Right, so any income from savings and investments, interest on savings accounts, dividends from shares, profits from selling assets, those are called capital gains, those are all potentially taxable. But there are some allowances that might mean some of that income is tax-free.
Like what? Give us an example.
Sure. There's the personal savings allowance and the dividend allowance, for instance.
Okay, good to know. What if you have income coming in from outside the UK?
If you're a UK resident for tax purposes, you're usually taxed on your worldwide income.
Wait, really? Worldwide. So it doesn't matter where the money comes from.
Generally not, no. It needs to be reported. Although it's always worth checking if there's a double taxation agreement between the UK and the country where the income is from.
Ah, right. So you don't end up paying tax twice on the same income. And finally, I want to touch on all those side hustles we see popping up everywhere. Selling things online, offering services, that sort of thing. Does income from those need to be declared?
Absolutely.
Yeah.
Every penny counts. It doesn't matter how small or occasional the income might seem, it's potentially taxable. Selling stuff on eBay, doing freelance gigs, even making money from online content, it all needs to be accounted for. And HMRC is getting smarter these days. They're getting data directly from online platforms.
So no hiding from the tax man.
Not really, no.
Okay, so we've covered all the main types of income. Now let's talk about how you actually report all of this to HMRC, especially for income that isn't automatically taxed through PayYE.
The main way to do that is through self-assessment. It basically means filling out and submitting a tax return. The official name is Form SA-100.
And who needs to do this self-assessment thing?
It's mainly for the self-employed, people who are partners in a business, and anyone who has income that isn't taxed at source.
So rental income, investments, foreign income, that sort of thing.
Exactly. And if you're not sure whether you need to do it, there's a tool on the gov.uk website that can help you figure it out.
Okay, handy. So let's say you do need to file a self-assessment. What does the form actually involve? What kind of information are you going to be giving them?
So the main SA-100 form covers a whole range of income and deductions. There are sections for student loan repayments, interest and dividends, UK pensions, charitable donations, that sort of thing.
And you mentioned supplementary pages earlier. When would you need to fill those out?
The supplementary pages are for giving more specific details about certain types of income. Like if you have employment income where not all of the tax has been deducted, that's not super common, but it can happen. you'd fill out the SA 102.
Got it. So it's all about breaking it down by income type.
Exactly. There's the SA 103 for self-employment income, the SA 105 for UK property income, the SA 106 for foreign income, and the SA 108 for capital gains.
Makes sense. So HMRC can see exactly where everything's coming from. What about actually filling out the form and sending it off? Any tips?
You can get the forms from the gov.uk website, either download them and fill them out by hand, or do it all online. Definitely read the guidance notes that come with the forms.
Yeah, the guidance notes are a lifesaver. They explain everything.
Right. You fill out the main SA 100 with all your personal and financial details, then attach any supplementary pages you need. Double-check everything, sign it if you're doing a paper return, and send it off. Easiest ways to do it all online, but you usually need to register for the online service first.
Okay, so the key takeaway here is if you have income that isn't taxed right from your paycheck, you absolutely need to get to grips with self-assessment and make sure you're declaring everything correctly.
Couldn't have said it better myself. Know your income, know the rules, and you'll stay on the right side of HMRC.
This has been super helpful. Thanks for breaking all of that down for us. We've learned a lot today, from the basic principles to the ins and outs of self-assessment.
And if you find yourself in a situation where your tax situation is a bit more, shall we say, intricate, or if you just like some personalized advice on managing your tax obligations, especially with all these different income streams, reach out to Pro Tax Accountant. They're the experts. They can tailor their guidance to your specific situation.
Great advice. Pro tax accountant folks, keep them in mind. Thanks so much for joining us for this deep dive. We hope you found it useful.